You're listening to the voice of the private sector. Welcome to Brian Bushlach's Business Briefing, only on FM News 101.
And just past the top of the hour across Puget Sound and Portland, Vancouver. And welcome to the voice of the private sector. I'm Brian Bushlach. Glad you could join us for this all-new edition of Business Briefing. And we've got you covered from tax tips to legal insight and commercial real estate in hour number one. Hour number two, we'll talk more about the economy and the anticipation that's building here for 2014 with Patrick Stone and Patrick Palmer from RPM Mortgage. A little bit later, a preview of 2-Minute Mobile for those of you small business owners out there worried about your presence on a mobile platform. Wait till you hear about 2-Minute Mobile. First, though, hard to believe, with tax season gearing up again, some people haven't picked up on the changes from 2012 into 2013. Hard to believe, but it's true. I sat down with our expert, Michael Lortz, at his offices in Portland. Michael, here it is 2014, and yet we're talking about 2013 and the changes in 2013 from 2012. Apparently, some people are unaware of this.
Absolutely. In fact, I was just talking with a client earlier last week, and, there's real confusion still about some of the changes, particularly when it comes to tax rates as well as the new Medicare surcharges. Just as a brief refresher, the top federal rate went up from 35% to 39.6%. We've also got capital gain rates that went up from 15% to 20%. But then the big deal that I think a lot of people are learning more about are the new Medicare surcharges that were part of the Affordable Care Act, and that can be as much as 3.8% and applies to passive income types of income.
And we have this conversation as a public service because you've encountered some other accountants who shall remain nameless who may not be aware of this, correct?
Yeah, they're either not aware of it or they just forget. Things are so fluid in our industry. But the bottom line is tax rates went up, and when you're looking at doing a transaction, either as a business or a real estate investor, you got to make sure you're using the right rates to analyze it.
Good stuff. Okay, let's talk about deductions and what changed in that regard.
Sure. So one of the big things that people are going to see on their 2013 tax returns, if they're in the top income bracket, is there's actually a phase out now where you start to lose some of your itemized deductions that are reported on Schedule A. So, it's great to have charitable contribution deductions, mortgage interest, etc., but those are starting to get haircut. And for some of our clients, that's a pretty significant loss of deductions. And unfortunately, there's not that much that can be done about it. It's just based on a percentage of your income.
Let's talk about the charitable piece, because I know this is a very interesting topic, and I know many of the charities across the entire Northwest were concerned about this. Do you see people dialing back their charitable giving just because of this, or is it pretty much going to remain the same?
I haven't actually had anybody dial it back yet. I think what's been even more alarming to charities is the prospect that there could be tax reform in the future, and there could be some significant reductions in the benefit of charitable deductions as part of tax reform. But the actual phase-out issue hasn't seemed to impact people so far.
That's good to hear. Michael Lortz at Geffen Mesher joining us here on Business Briefing. And let's talk about the tax return filing season. We had yet another government shutdown. I know that's in the distant past. Looks like things will be okay throughout 2014, but it definitely had an impact on tax season.
Yeah, it did. I think the government shutdown lasted, a couple weeks, as I recall. The IRS has come out and said, well, because of that, we now have to push out further when tax returns can be filed. So for individuals, maybe they really need to get their tax returns filed early because of some sort of financing or some sort of loan assistance, etc. Unfortunately, 2013 individual tax returns will not be able to be filed until January 31st. That's the earliest date that the IRS will start processing those returns this year.
Okay, so they won't take them before January 31st. Any extension on the deadline?
Of course not. That would be nice. I think the IRS actually addressed that in their public comments, which was that the date is in the law in terms of the filing deadline of April 15th. I think we all know that the government also wants to make sure that the revenue comes in by then as well for balances due on April 15th. So no change in the filing deadline.
Okay. All right. Let's talk 2013 tax provisions that have now expired for 2014. And I know that there's some that you think may get extended, but let's kind of talk about those, both business and individual.
Yeah, so there are actually quite a few provisions that have expired. Believe it or not, there's about 60. So here they all are. Just kidding. But seriously, there are some provisions for businesses and some for individuals that I think will be important. Maybe I'll start on the business side. For businesses, we've been enjoying these accelerated depreciation benefits. Could be for equipment that businesses are buying, could be for tenant improvements that landlords or tenants are putting in, and there's quite a bit of reductions in those accelerated depreciation rules for 2014 as it stands today. In 2013, we had this 50% bonus depreciation. We also had a Section 179 limit of $500,000 so that small businesses could write off a large portion of their equipment all at once. That's all gone for 2014. The Section 179 limit is down to $25,000, and the 50% bonus depreciation is gone. So unless those things get extended, it looks like we may have a lot less depreciation deductions for businesses.
And that is huge when you look at companies that buy vehicles and fleet sales. I mean, that's a huge change, isn't it?
Yeah, it really is, and it can really make the difference when you're doing an analysis as to buy something or not. Now, it's possible this will get extended. It has for quite a few years in a row now. And, this is really unfortunate because the idea behind bonus depreciation is to stimulate the economy by making it pencil out better to buy something. Well, if you buy it and then it gets extended retroactively, that really didn't impact your decision as to whether to buy or not. So it's not great public policy.
And I know this is the trillion-dollar question. When would you likely see this extended? I mean, is there any idea? Would it be early this spring or?
That's a good question. And, most years in the past, an extension bill, if it's not passed by the end of the year when the things are going to expire, oftentimes it would be early the next year. I think this is going to be different for 2014. And the reason is, well, it's an election year. And the real question is, will Congress deal with any kind of tax bill prior to the election? And the national commentators are really questioning whether they will or not. It's possible we could go until the fourth quarter of this year before we know whether these items will be extended or not, and then they would potentially be extended retroactively all the way back to January 1st.
Very interesting. So stay tuned on that one. Michael Lortz from Geffen joining us here. And speaking of politics, what prospects are there of tax reform in 2014? I know we're hearing some whispers.
Yeah, so tax reform has certainly been part of the political dialogue a lot lately. There's a couple developments recently that kind of changed the outlook on that. One, of course, is the elections. And again, anytime you're in an election year, there's real doubt as to whether or not the parties are willing to grapple with an issue that by its nature creates winners and losers. There's always going to be some people that benefit and some people that are hurt when you're dealing with comprehensive tax reform. The other thing that's relevant is Senator Baucus. He was recently named as the ambassador to China, and up until then, he has been the chairman of the Senate Finance Committee. Now, we all know his replacement, Senator Ron Wyden from Oregon, is taking over that committee. But really, with the changing of the guard there, I think that there's less likelihood that anything will happen in 2014. It's going to take Senator Wyden a while to figure out what direction he wants to go. And, of course, then he's got to collaborate with a different party in the House. So likely tax reform is dead for this year, or at least until the end of the year. We're likely looking at a new Congress taking that issue up.
Well, great insight as always. I know it's about to be your busy season, so I hope to see you every now and then. I'll send you some Starbucks here to keep you going.
Sounds good, Brian. Thank you.
And again, our thanks to Michael Lortz at Geffen Mesher. If you'd like to contact him, direct line 503-445-3368. And Michael, a featured speaker at our upcoming event at the Bing Lounge in Portland. When we continue, we'll shift gears and talk legal perspective with Greg Harris from Harris & Bowker when Business Briefing continues.